Welcome back to the Breakfast Show. Yes, it's a Financial Tuesday, and we're going to talk about investing in gold. Now, more specifically, we're talking about gold bullion schemes, and we have, of course, our independent financial advisor here to tell us more. So over to you, Mr. Yap.
Good morning, fellow Malaysians. You're now watching Financial Freedom Minutes with Ming Hui. So today, I'm going to talk about gold bullion investment. Now, those of you who follow the market, you know that due to the US currency depreciation and many other factors, gold prices have been growing strongly. Now, on the September 6th, gold prices hit 1,921 US dollar per ounce. That is quite a record high. And of course, in this month, mid of this month, the price adjusted to around 1,600 US dollar. Over past 15 months, gold prices have grown more than 25%. So today, I want to share with you something about the gold bullion investment scheme, and you can determine whether this investment scheme is for you. Now, first, we need to find out what is a gold bullion investment scheme. Basically, it's an investment scheme that allows you to buy gold bullion or gold coins of different sizes. Okay, this investment provider, they may claim, this operator, they may claim they can offer you the cheapest bullion gold bars in Malaysia and with qualified assayer certificate. And also, this operator, they may claim that they can guarantee to buy back the gold that you bought from them. Okay, so this is a basic understanding of the gold scheme. Now, what are the benefits of investing in such a scheme? Let's look at the next slide. The benefit of investing in such a scheme is that, of course, when the gold price goes even higher, you stand to enjoy the gain. The number two benefit is that, of course, you get to diversify your investment from the traditional investment like shares, like bond or property investment, especially US dollar investment, because normally when US dollar weaken, that's where the gold prices will get stronger. Now, thirdly, gold is a very good investment for your wealth preservation during crisis, like wartime and etc. So this scheme provides you with physical gold compared to some bank. They may offer for you from gold investment for you, but mainly those are just bank gold account which give you certificate without any physical gold. Last but not least, this investment scheme actually is something very affordable. You can invest into this gold investment for as low as 800 ringgit only. And of course, you can go as high as 48,000 ringgit. Okay? Now, like what I always advocate, there's no free lunch in this world until today. So, what are the downside or potential risks? Let's look at the next slide. The potential risk, number one, is that whenever you invest in such a scheme, there's a difference between buying and the selling price, range from 4.5% to 7.9%. What does it mean? It means today, it means that if you were to buy a gold investment from this kind of operator today, and then 30 minutes later, you change your mind, you want to sell back the gold to the operator, you will immediately suffer a loss of 4.5% depending on the size that you buy. So that happens with or without any fluctuation of the gold price. Compared to if you buy some of this gold investment scheme from banks like UOB and etc., the difference between buying and selling price is very small. It ranges between 0.55 to 1%. Next, don't mistaken gold to be very safe investment because the gold price moves in a very volatile manner. You can look at the next chart, next slide, which I show a chart. We show the 30 years gold price history. If you look at the year 2000 to 2010, the gold price increased from about 300 US dollar to about 1,008. And that is about how much? That is about 400% growth. So like whatever things happen into any stock or investment market, whatever can go up very strongly can also come down very strongly. Okay? The third potential risk is a safekeeping risk. You look at the next slide, you can find out that when you buy a gold compared to you buy a share you don't have to take home, but gold bullion you need to take home and then you keep it so that it's safe from being taken away by any person at all. So you need to make sure you have a proper place to keep the gold. And last but not least, you need to be concerned about company management or the ownership of the operator that you buy the gold from. Because what happened is that a lot of this company, they offer the service to keep your gold. Now, my suggestion is that if you are very doubtful or you are not so sure about the company's management, you better don't leave your gold bullion there, because it's very, very risky. There's a chance that you may lose the gold bullion that you invested into. Now, let's look at whether this investment is for you. Okay, next slide we can see this investment, gold bullion investment, is for you if you believe that gold prices will continue to go up. Maybe you feel that now is 1,006, but anytime soon it will go to 2,000, 2,005, 3,000, then you can go for it. And of course, if you want to diversify your investment further from your investment portfolio, of course you can consider that as well. But no matter what, I would suggest that you do not put more than 5% of your investable asset into this gold bullion investment. Otherwise, you may subject yourself to too high the risk. Okay? And it will only be suitable for you if you have proper place to keep the gold. And I would caution you again, don't ever keep the gold with the company that will sold you the gold. Okay? Always keep the gold with your own self. Now, last slide. Then this scheme is not suitable for who? If you need the money, you need to use the money within 3 years, I would suggest that you don't put your money into such a scheme. Say, for example, if you need to spend the money for your children's university education, maybe 6 months later, I would suggest that you don't touch this money, don't invest in just a scheme, because what happens is that 6 months down the road, if your gold price drop by 20% and you need the money, you got no choice but to realize a loss. So don't ever do that. Number two, if you are a low-risk investor, again, you are someone who do not want to risk losing the capital of your money, don't touch gold, because as you can see, gold prices now is very high. Of course, some people may think it go higher, but I believe that it may also drop. If it drop more than 30%, then you may find that it's not as safe as your fixed deposit. So this is what I have to share today. Remember, every one of us can achieve financial freedom. Okay? Talk to an independent financial advisor to optimize your money today. So back to you, Aisha and Hanson.
Good morning.
Thank you so much.
Thank you. Yeah, thank you for coming in. Merry Christmas to you. Firstly, what makes you think that the gold prices will come down? Because you mentioned that your thoughts are gold prices will come down. What are the signs that point to make you come up with that opinion?
Now, this based on the economic study. Okay. Of course, we believe that because of this U.S. currency depreciation and there's a lot of money printing in the whole world, we believe that gold prices will get stronger. Okay, but I believe that whatever gets stronger, okay, it will not go in a straight line.
Yeah.
You know, say for example, 5 years down the road or 10 years down the road, gold prices may touch 2005.
Yeah.
But from 1006 to 2005, it will not be a straight line.
Right.
So along the way, it may go to 1006, then go to 1008, then drop to 1005, 1002 before it touched 2005. So if you are not familiar with gold investment and you want to actually invest for a long term and then suddenly it dropped by 30-40%, you don't know what to do. So that's why I say it will not be a straight line.
Right. So you're suggesting that for those who are wanting to buy gold, I mean, it's quite unfortunate that, you know, we didn't have this conversation 30 years ago and it was about $300 US. It will probably never
Actually, you don't even go so far back, like 3-4 years ago.
It will probably never get that low ever again. But, you know, I think because of that, a lot of people are actually noticing gold. Everybody knows that, ooh, it's 1,006 per ounce.
Yes.
So you're suggesting to people who probably would want to invest in gold is to actually watch the
gold price.
The gold prices. But here's the thing, you know, you always think, oh no, it will go lower, it'll go lower, and then it goes high, and then it goes low. How would you decide that, okay, you know what, let's just buy it now?
Well, the thing was, I mean, before, correct me if I'm wrong, in the past, you know, your money was tied to the amount of gold that a country reserve would have.
Now
but now they totally, you know, money is on its own.
They totally unconnect it, so you can actually have a different amount of gold, and then you can print a different amount of money, like
so
US dollar now.
It's in no relation, and I think right now a lot of people, I mean, the whole rush for gold is because, like you say, there was too much money fluctuating, and there's lack of confidence in terms of monetary or currency investments. That's why, you know, not just gold, but even silver itself.
And
copper,
other commodity like
crude oil,
as well got affected.
Investors are rushing into that. So, do you see this trend continuing? You know, people losing a bit of confidence in money and moving more towards commodities.
So that's why what's actually happened now, like what you mentioned just now, is because of the lack of confidence of paper money. So that's why when you actually lack of confidence of paper money, people will actually shift the money into something physical, something tangible, like any commodities. Okay, so this trend, like what I say, you know, it will continue unless the government of the world really come out and solve all the debt problem and then stop printing money. No, otherwise this trend will continue. But the point is that if you are not familiar with gold history, the nature of gold investment, and gold investment is something is the investment which is very manipulated. You know, because it is not only a simple commodity. The government of the world has got an interest in gold as well. So that's why you can see certain government, they may buy gold, they may sell gold, and as an average investor, you don't know what is the game of the US government. So imagine that you think, I'm very positive about gold. Gold will just go out from 1,006 to 2,006. There'll be 1,000 ringgit more, 1,000 US dollar more. That may be true. But you do not know in between what the European country, what China government, what Japan government, what Australian government and US government, what would they do to intervene the market? So when they intervene the market, you get panic. Say for example, from 1,006, it dropped to 1,000 US dollar. Will you be confident enough to hold? If you are not, you may sell. If you sell, you may lose more than 50%. You know? So that's why if you are not very familiar with gold investment, you better wait for the price to adjust first before you buy.
Right.
You know?
Okay. So price adjustment is what you should wait for if you're not too clear about gold investment. And unless you do your studies and you really do believe, as you mentioned earlier on, that it will keep going up.
Well, I personally think it will keep on going up because it is a natural resource which will eventually deplete. So it's definitely not something that you'd want to resell in a couple of years. It's something that you'll definitely hold on to for years and years to come.
Of course, like people like Hanson, according to what he shared with us, he bought some gold. 3 years ago.
I know, that's
he got it at a lower price. Yeah, of course he can afford to hold it. You know, but people like myself who have not bought a single ounce of gold, then of course I would not want to buy when it's so expensive.
It is quite
so it is relative compared to where you are now. No? You bought it at how much?
Wow, I can't. I think below 1,000.
See how much you make?
Below 1,000.
Wow, so good.
Stroke of luck. Anyhow, let's move away from my financial situation. And thank you very much, Mr. Yap. For more information, ladies and gentlemen, you can log on to www.yapminghui.com and find out what his tips are. Or you can actually email him.
Yes, at inquiries@yapminghui.com or SMS 012-754-1698 if you have any inquiries, before you want to make any major investments. Okay?